For more, we're joined by Danny Blanchflower. He's the economics professor at Dartmouth and also a former member of the Bank of England's Monetary Policy Committee. He's in New Hampshire this morning and joins us from there. Danny, good morning. Thanks for joining us.
Yep, good. Nice to see you.
The European Central Bank and the Bank of England declining to follow the Fed in pursuing more easing through large-scale bond purchases. How much will the Fed's easing jeopardize what the BOE and the ECB want to accomplish?
Well, obviously, in some ways, the Bank of England can ride on the coattails of what's happening in the US. If the US strengthens, then the UK will strengthen too. But I think this is another big mistake on the Bank of England. The Fed's had it right pretty much all the way through. Cut things early in 2008. The Bank of England didn't do that. And my view was actually in a way you were in quantitative easing wars. One of the big benefits for the Fed was that actually you could then depreciate the currency, and that's a problem for the UK. I argue that they should have done more QE, and today the exchange rate strengthened for the pound. That's taking stimulus out. So it looks to me that with all the forward-looking indicators looking down, the Bank of England once again has made another big policy error, and the Fed again has got it right.
Now, one thing the BOE keeps citing is the inflation, which is higher than what the government wants to be seeing. Why are we seeing inflation in the UK but not here in the US?
Well, I find it really interesting that people say that. A lot of the current inflation has just been driven by a thing called value-added tax. Indirect taxes have pushed up the inflation rate. But if you look at the Bank of England's forecast 2 years out, the forecast is way below the target. So I find it very hard to understand any of that. The bank's going to produce a new forecast on Wednesday, and it's going to say, once again, inflation is going to hugely undershoot the target, which means that they should be trying to reflate the economy. So basically, inflation has been driven by tax increases. And if you look at inflation, stripping out those tax increases, it's much lower. And the other thing, the big problem they had was house prices weren't in there in the boom times, and they're not in there now, and house prices are falling. So the talk of inflation in the UK, I think is nonsense. And I've said people who want to be raising rates in the UK are from another planet.
Hey, Danny, it's Dominic here. One place we are seeing inflation, however, though, is in commodities, right? I mean, we talk to traders all the time who basically say that the only thing that QE2 basically guarantees here in the United States is not a reduction in unemployment, but just a rise of oil to $100 a barrel. We're seeing that across all commodities. So what's going to happen there going forward?
Yeah. Well, I mean, obviously part of the story with the QE is that you want to raise asset prices. I mean, the markets did that. That was sort of built in to some degree. But the point of doing quantitative easing is to get yourself out of a deflationary position and try to reflate the economy. You're trying to create some inflation, and the problem is that you can't. So this is actually the purpose of the thing. Obviously, down the road, you're going to deal with the fact that inflation will rise. But what the Fed's sensibly trying to do is to prevent deflation coming, reflate the economy. And the other thing it's trying to do, of course, is to get the exchange rate down. It's trying to boost the economy, try to increase growth, try to increase the number of jobs. So this is a sensible thing to do. But down the road, you're going to have to deal with that problem. But this is essentially what they're trying to do. Give people incentives to invest, give them incentives to hire, and kickstart the economy. That's the purpose of this thing.
Now, Danny, let's bring in the ECB to this because they appear happy with moderate growth and moderate inflation, whereas we have both here in the U.S., but the Fed finds that absolutely unacceptable. Why is there this divide in philosophy? Is it cultural? Is it a reflection of the U.S.'s customary role as the economic superpower of the world?
Well, I think my view is that what the ECB is doing is Paul de Gaulle calls it the economics of the Maginot Line. They're fighting the war against inflation, which doesn't exist. And actually, it may be fine for the Germans, who have a very low exchange rate and are doing fine. But go and ask people in Ireland and Spain and Greece and Portugal. This policy is not working there at all. And the ECB has been very, very slow to react. So yes, I think it is cultural. I think it's the German view that, this is all about inflation, but that's complete nonsense. Inflation hasn't been the problem through all this. It's lack of liquidity. It's a problem of the banking system and so on. So I think that actually the Fed's done a pretty darn good job. I'm a big fan of the Fed. I think Bernanke's done an excellent job. The Bank of England's been behind, and the ECB's been behind that. So going forward, I think the Fed's done the right thing, and I commend them for what they've done. They care about jobs, and the only show in town is monetary monetary policy because you can't do fiscally, you can't do anything on the fiscal front, and it's just, there's mistakes. They're doing the opposite of what they were doing, but fortunately they've got the Fed who's doing it right.
All right, the only game in town, the Federal Reserve. Thank you so much, Danny Blanchflower, economics professor at Dartmouth, joining us.